There's a new report from CIBC economists, and they use a chillingly simple word to describe the Canadian housing market: broken. Why they are describing the housing market as broken? Because we have stumbled into a trap. According to one of the report's author, Benjamin Tal, he's saying the housing market now is too expensive to buy, but not expensive enough to build. It's like a strange standoff. Home prices are still too high for most buyers, but they have fallen so much that developers are looking at the numbers and realizing they would actually lose money on a new construction. So what does a broken market look like? This CIBC report and other recent data points to three huge red flags that show just how gridlocked the system has become. Think of it like a massive traffic jam where no one can move forward. In this video, we are going to explore the catastrophe unfolding in the condo market, the phantom housing numbers that's fooling almost everyone, and the affordability paradox that leaving buyers trapped. This isn't just about spreadsheets and reports. It's about the dream of home ownership that's slipping away for millions. Let's first reveal the condo oversupply catastrophe. This is where the damage is really starting to show. According to the CIBC report, the pain is most significant in the oversupplied condo market. And a look at the data confirms the damage is undeniable. Since the peak in early 2022, national prices have dropped significantly. One report from April 2025 shows resale condo prices in Toronto are down nearly 16% from their 2022 peak. Now here is this more extreme than in the GTA area. New condo sales have absolutely created. In 2025, the number of new condo sales in the GTA area and Hamilton area fell to its lowest level since 1990. Those sales were a shocking 91% below 10-year average. At the same time, a flood of newly completed units is hitting the market, with around 31,000 units expected in the GTA area in 2025. This has created a stalemate for investors who bought small units hoping to make a quick profit. By the way, my name is Ilham Ibrahim. I'm a real estate agent here in Vaughan. I help Canadian families buy and sell with confidence. Let's address the phantom housing starts. So what about all the new homes that have been built? And this is where the story gets really misleading. So if you just look at the headline numbers, construction seems okay. Canada saw housing starts rise by 6% in 2025. And you might see that and think things are holding up. But the CIBC report highlighted a huge flaw in the data. It's like looking at a star in the night sky. The light that you are seeing is actually created years ago, and it doesn't tell you what the star is actually doing right now. Pay attention to this. CMHC only counts a housing start when a building foundation is poured. And for a condo tower, that could be 1 or 2 years after the project is sold. Today, official numbers are reflecting decision made back in the hot market of 2024, not the reality on the ground right now. Benjamin Tal says the new condo construction is basically zip now, with a real recovery not expected until year of 2028 and 2029. Let's touch on the disappearing wealth effect and the affordability myth. And here's the final cruel twist: the affordability paradox. Yes, home prices have fallen. The national average home price is down from its peak 2022. This improved affordability should be a good news, but the CIBC report made it clear it's not enough to solve the crisis. As home values fall, it creates a disappearing wealth effect. Think of it this way: your home value is like a financial safety net. As it shrinks, you feel less wealthy. You are less able to borrow against it, and you are forced to save rather than spend, which hurts the entire economy. This price correction, it's like a medication that's strong enough to give you a painful side effect, but is not strong enough to cure the disease itself. It's doing just enough damage to freeze the market, but not nearly enough to fix the deep structural affordability crisis that's been building for over a decade. So where does this all leave us? The gears of the market have seized up. We have a pileup of condos, a dangerous stall in the new construction market, and an improvement in the affordability that helps almost no one. The system is gridlocked. As the CIBC report concludes, this painful slowdown should be seen as a chance to finally deal with the core problem, trying to fix things without addressing the building costs. It's like trying to fix a crooked house by just repainting it. The real issue is in the foundation. And until that structural foundation is fixed, we are all going to be stuck in this broken market. I know it's a lot to take in, and honestly, it's a pretty bleak picture. But understanding what is happening is the first step to figuring out your own path forward. I'm really curious to hear how is that affecting you. Are you a buyer waiting on the sideline? Or a seller feeling the pressure? Or a renter wondering what this all means for you? And if you found this breakdown valuable, make sure to subscribe and hit that notification bell for more deep dive into the Canadian economy. And thank you for watching, and I'll see you in the next video.